There you go, Claire. How was that? Thank you so much for posting that in the room. Guys, guess who didn't unmute the YouTube feed? Sorry about that. I will live forever. I like it. Claire, is that better? Thank you for bringing that to my attention. That would have been the worst video ever. Why do they just keep moving their mouse over stuff? God's making more Novaks. They are, actually. There's one in the oven. Next generation. Good stuff. So guys, tutorial section. This is where the answers come from. This is where the rules, the looks, everything that I teach comes right from this first page, right from the tutorial section. And I love the URL. The URL says building a foundation. That's exactly what you're going to do. Keep it simple, right? No reason to not keep it simple. Let yourself be a student. Guys, you're all good at what you do, right? You've all excelled in your chosen profession. You're used to hitting home runs, not singles. You're used to birdies, not bogeys. Let yourself be new again. This is a brand new endeavor. This is your freshman year of college. You don't know what you don't know yet, so let's fill up that old brain with all the great information. And it all comes from right here, guys. All the rules that we talk about, the looks that we're working on. But what I want you to do in that spirit of simplicity is focus on one trade for 30 days. And I know that sounds like not as much fun, but it's going to build this foundation. It's going to create this core base of knowledge. If you focus on trend trades, 5-1 trend trades that happen after a termination condition on the 13-2 chart, guys, you're focusing on the highest probability trade that we teach. And those high probability trades are defined when each indicator on every chart agrees with the rules for the trade. This is when all your triggers are the strongest. There's nothing in your way, no termination conditions, no trouble spots between you and your entry. Guys, this is a trade that when you really focus on it and you learn to execute, typically wins between 70 to 80% of the time. And that's not just me telling you. That's you guys putting it into practice, following the checklist that I'm going to give you and showing me these results. Your high probability trend trade is going to create an amazing skill set for you, and that's going to be chart reading. Because 90% of what you do in the day is going to be chart reading. I've had people tell me that it's 99%, but let's go with 90. It's a nice even number. 90% of what you do is going to be chart reading. 10% of what you do is going to be actually taking trades based on the chart reading. Because that mastery that you're on the path to developing incorporates 3 essential elements: where the market is likely to continue, where it's likely to go, and where it's likely to stop. We're going to use these 3 concepts. Where the market is likely to continue. Guys, this is going to be your entry points for that high probability trend trade, that continuation of the trend. You'll be able to identify where the market is likely to go using trigger line strength and Fibonacci. This is going to help you make great profit target choices. And then you're going to be able to understand where the market is likely to stop. And we call these termination conditions. You'll know when it's no longer safe to take a direction or to take a trade in the direction of the trend. You're also going to be able to use these termination conditions, these areas where the market is likely to stop, as an anchor for that high probability trend trade setup, because that first 30 days is focusing on the trades that happen after a termination condition on the 13-2. So you're going to get 3 rules. It's going to teach you to read your charts. It's going to teach you to recognize conditions on your indicators that provide advantages. And then once again, in the spirit of simplicity, you're going to look at those 3 charts, or those 3 rules, on 2 charts. I'm going to read this. This is important from John. John says he's had many clients who start trading their way and ask him the same thing: how do I fix my poor trading? And his reply is always the same: use Snagit capture software and post every trade you make with the checklist of your rules posted on top of that trade to get feedback on every trade. Only a few listen to it. It's true. I didn't listen to him. Never listen to your brother the first time, guys. It's just, it is what it is. And get feedback on every trade, right? Make up your mind today that you're going to do the first time. Don't have to start over like so many do. And John's absolutely right. About 2 in 10 listen, 1 in 10 actually do it. Everybody tells you that they're going to do it, but about 2 in 10. So he's posted a great picture. We talked about taking that picture. I'll show you in Snagit. Guys, Snagit is a $63 investment. But Snagit is like capture software, but with bells and whistles. So I'm actually showing you my capture editor here. And what he's showing you is when you're talking about pictures and annotating charts, guys, you can take a checklist that I'll provide you and put it right on the chart that you're trading. You can type it up. You can do everything that you need to do. Not only are you making sure that you're following rules, but you're also visually verifying. You're showing me that you have rules. And we'll talk about those rules right now because we're going to look at 3 rules on 2 charts. Keep it simple, right? John's in the process, I hope, of having coffee mugs made that say, let the 13.2 lead the way. Your 13.2, you're going to use the most current bar. This is a 1-bar event, and you're going to be able to, nope, you're going to be able to identify three very distinct advantages on 1 chart. You're going to be able to understand the trend of the market, whether it's trending up or down. Nexgen's made this very easy for you. If the background on the 13.2 is green, you're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. If the background is red, you're in a downtrend. You should only be looking for rules to be met for high probability trend trades short. Guys, that's an advantage. Being able to identify in a nanosecond which way the market is trending and then committing to trading in that direction for the first 30 days. Also on the 13.2, your first 2 rules out of 3 are going to be met on that 13.2 chart. And the only way you can turn your eyes to that second smaller chart is if these rules are true. Because the 13.2 is a broad stroke of a brush. It's the general temperature of the market. It's creating the advantage of trading with the trend. It lets you identify the advantages associated with rules 1 and 2. And then when those rules are met, and don't worry, we're going to talk about them in great detail, then and only then will I turn my attention to the 5-1 chart because this is your entry chart. This is where you're going to refine that broad stroke of a brush. You're going to pinpoint your area of entry, that point where the market is likely to continue. So rule number 3 is going to teach you to identify that area where the market is likely to continue. And by doing so, it's going to allow you to reduce your risk. It's going to let you maximize your profit potential. So guys, I'm going to share a lot of pictures with you. Get them into your spreadsheet, save them in a folder, study them every morning, get that repetition. 3 rules, 2 charts, and guys, each rule provides a very distinct advantage. I'm going to give you the Cliff Notes version of the rules. This is the stuff that I type on my chart when I take a trade. The rules for a high probability trend trade. Rule number 1 says strong triggers. And again, I'm going to remind you, we're going to talk about each and every one of these rules. You know what? Let me check my list real quick. Cosmo's not with me today. Rule number 1 says you must have strong triggers. Rule number 2 says no termination conditions should be present. And rule number 3 says that we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Each of these rules provides a very distinct advantage. Rule number 1 gives you the advantage of momentum. Rule number 2 gives you the advantage of a clear path. And rule number 3 is going to give you the advantage of taking an entry where the market is likely to continue. So when you're taking that high probability trend trade, you get the benefit of the mindset. You can identify the advantages and you can feel good and confident going into this trade with a methodology that's been proven to win more than it loses because you have each of these advantages in front of you. The flip side of that coin is if you do break your rules, and you probably will in the beginning because you're learning them, you can identify which advantage you've given up. Maybe you're trading into a termination condition. You've forfeited the advantage of a clear path. So I like to think of it on both sides of the coin, without a doubt. And then John posted in there, post your losers too. They happen daily for most. Share them, you'll learn more. It's important to make sure you follow the rules when you lose. And guys, when you post a loser, we'll put the checklist on it. We'll make sure that the rules are met. This was a loser from yesterday, and I have zero qualms about posting this in the room. Each of the rules were met. There was the advantage of momentum, a clear path, and entry where the market is likely to continue. And anything that wins 70 to 80% of the time is mathematically obligated to not win 20 to 30% of the time. It's just a cost of doing business. What we're going to do in this first hour is begin the process of developing trust in these rules, developing trust in this checklist, so that when you have that cost of doing business, the only response you really have is next. Let's get to the next trade. Let's get the rules met one more time. And let's not base anything off of one trade. Let's base it off of 20 or 30 trades. And let's see where those percentages fall in the grand scheme of things. Because this one fit the rules beautifully and didn't win. And then this is the exact same look later that afternoon, and it goes straight to the target. The confidence that you build in the rules will allow you to take this entry even after a loser because you've developed that trust. So let's get through the rules and let's talk about them. Rule number 1, strong triggers. What's a strong trigger? Easy to identify, easy to commit to. A strong trigger in an uptrend means that your small triggers are above the large triggers. Your large triggers are wide, they're angled in the direction of the trend. And it's that space created between the small and large that lets you know that the odds are favorable for the market to continue in the direction of the trend. In a downtrend, small's below the large, accelerating away. The large are wide, they're angled in the direction of the trend. That space created between the large and the small lets me know that the odds are favorable for the market to continue in the direction of the trades. You guys are going to hear me say odds favorable momentum throughout the day. What was your trigger look? Did you have odds favorable momentum? Sometimes I'll type it on a chart, OFM. The answer should always be yes for the first 30 days, going for that high probability trend trade. Because when those small triggers work their way into the large triggers, we call this a weakening of the large triggers. Anything can happen up or down. You go from odds favorable to anything can happen. So in the very beginning, we're going to commit to that odds favorable momentum. And remember, we're studying to develop trust. So if we scroll through our 13-2 chart, the smalls have separated from the large. We're going to begin looking for these wicks or these tails and just circling them because these are potential entries on your 5-1 chart. So if I were to bring up, this is crude oil, I could scroll back and I could look for those opportunities with odds favorable momentum. I can look for that opportunity with the tail. And this starts the process of studying. This look lets me know that the odds are favorable for the market to continue in the direction of the trend. And once again, you'll notice that when those triggers are strong, the market tends to keep moving. And it's a wonderful feeling to have that advantage as you go into the trade. You'll be studying this on crude oil in class here. You'll also be looking here on the S&P. When those trigger lines begin to accelerate away from the large, they start to create that space. You're going to start looking for those opportunities. You're going to look for those opportunities with those strong trigger lines. To be able to have that advantage of momentum. And I'm looking through here, and guys, that's where we are in the day. The smalls are beginning to accelerate. Give me a Y in the room if you're with me, guys. Odds favorable momentum. Waiting for the best of the best, having the advantage of a market that's likely to continue in the direction of the trend. What a great feeling going into the trade, right? It's a freight train of momentum in your favor. Rule number 2 says don't trade into a termination condition. Don't trade into an area where the market is likely to stop, right? What is a termination condition? A termination condition is a Fibonacci-based indicator that may reverse the market based on a comparison of that Fibonacci area and your T3 trigger lines. We're going to go through it. It's a 2-part process, and it's easy to study. It's easy to recognize with just a little bit of effort. The areas can be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots. It can also be a cyan divergence low line or a magenta divergence high line. A large chart midband if the large triggers are a full bar away. And then there's one more, this third divergence in the same area. You'll also recognize this on a 13-2 chart, but you're going to see it first on a 5-1 chart. So we're going to talk about recognizing it and how you can identify change in the moment on that smaller, faster chart. But first, let's learn how to identify areas that may stop the market. And it becomes pretty simple. Let me take a picture of this picture so that I can mark it up a little bit for you guys. 2 things happen when you're identifying a termination condition. The first thing is that price reaches an area. It means those price bars make it to or within a tick of Fibonacci support, resistance, those 1-to-1s, the divergence lines. When price reaches an area, ask yourself, where are the trigger lines? Because when it reaches the area, if they're not below support or above resistance, don't take any more trend trades on the small charts. You've reached an area likely to stop the market. You see it up top as well. Price reached that area of support. All of the trigger lines remained above. No more trades in the direction yet. You have to allow an area to clear with odds favorable momentum before resuming trades in the direction. So when is an area clear? When both your small and your large triggers go below this area of support, consider the area to be broken. And you'll notice that that blue Fibonacci support begins to act as resistance. It's still a key area, but now we're on the other side of it. Now we're trading to it. On a pullback, price reaches an area. All of my trigger lines are below that area of resistance. This area of resistance is likely to stop the market, and it does, and it goes straight to that next area. Everybody with me on that one? Hey, Joe M. Nice to see you in here. Reach an area where your triggers. Two simple things to have happen to identify. And then, guys, there's a trade. This will be your first medium probability trade as a new trader. When you get outside of that 30 days, you're going to be able to identify what we call a 50-50 situation. And it's not an idea of your chances of survival on a trade. It's merely identifying where the trigger lines are in relationship to a key area. 50% of my trigger lines, meaning the small, have broken below the area. 50% of my trigger lines, meaning the large, have remained above. This is an area with the potential to break, but has not broken yet. Trigger strength, that odds favorable momentum, increases the likelihood of the area breaking. But you're going to pause for just a second on that 50-50. And you're going to say to yourself, in order to take that trend trade on the smaller chart, I want conditions to be perfect. I want them to be ideal. And we'll talk about that ideal scenario. And what I'll show you as we go through is that, here's a picture right here. 50-50, odds favorable, smalls below, large above. When my 5-1's perfect, I'll take this trade. And we'll talk about that ideal entry. Guys, are you with me on this one? Give me a Y in the room. Price reaches an area. Where are your trigger lines? Simple two-step process. Price reaches resistance, trigger lines remain below, I'm not going long. Price reaches support, no trigger lines through it, I'm not going short. Guys, we're in a holding pattern. 90% of what we do is going to be reading those indicators, waiting for an advantage. I like to show this picture because this is such a great lesson in so many forms. Resistance, no triggers through, no longs. Price accelerates away from those large triggers all the way back to support, all the way back to that mid-band. Those large triggers do not follow. Do you see that? Price breaks away. The large triggers just say, you know what, I'm not into it, I'm not going. Guys, when price accelerates away from those large triggers, hits an area, it typically snaps back. It closes that gap all the way back. And that's exactly what happened here. Price reaches that key Fibonacci area, the triggers don't follow, and price accelerates and snaps right back to it. Guys, this is the gap theory. This range right here acts like a vacuum, and that's your cue to not look for continuation short just yet. We start the process over when price reaches this area of resistance, this magenta high, and this second area of resistance. You'll notice that absolutely none of the trigger lines get through this area. Now we have what's called a pivot stop out. And when price trades above a divergence line and then back below, no long trades into that area. And when it happens at one of those Fibonacci areas, it becomes a very powerful termination condition. This termination condition creates a full reversal. Large triggers go from green to red. That full reversal gives me odds favorable momentum. Guys, if we go back to that recipe for success on your first 30 days, that's it perfect. Focusing on the 5-1 trend trades that happen after a termination condition on the 13-2 chart. We see it from the bottom. It's a strong top when a termination condition creates that reversal. This is a strong bottom creating that reversal. Price reaches 1-to-1s. We don't even worry about that odds favorable momentum. With rule number 1 met, we're looking for rule 2. When rule number 2 is met, price reaches support, no triggers go through. We're not looking for any more short trades. This termination creates a full reversal. This full reversal gives me odds favorable momentum with nothing in the way. Guys, that's your best of the best. That circle on the tail is your high probability trend trade, that trade that typically wins 70 to 80% of the time. You'll see over here we had that same odds favorable. That 50-50 look could be a great trade if the conditions are right on the 5-1. So strong bottom, termination condition that creates a full reversal. Strong top, termination condition that creates a full reversal. Sometimes that market, so a synthetic trigger, Rob, anytime you hear the word synthetic, it typically means it comes from a different time frame. So it may be a Fibonacci line from a 5-1 that you see on a 13-2 chart. As we look at our 5-1 chart, the synthetic trigger is the trigger line that's superimposed from the 13-2. It's one of those words that the coders and the programmers use. I like to just say trigger line. I like to eliminate one word because I can see it as a trigger line. And it just kind of helps me out with that. So when price pulls away from the triggers, accelerates fast, it typically snaps back. You even see it right here as it reaches the mid-band. See how there's room for a full reversal bar before it hits that large trigger? It means no long trades in this area. But once the areas break and things come together, you have a perfect opportunity. And every now and then that market's not going to make a key area. It's going to turn seemingly from nowhere, maybe from the bottom, maybe from the top. So this next termination condition is not that picture. John snuck one in there for me. It's 3 divergence in the same price range may terminate a trend. Divergence is a loss of momentum, guys. It's calculated using some indicators in the background. But for us, for those of us that aren't tech guys that don't need to know the hows, we just want to read it. If this negative number prints and the divergence line prints with it, right? And they'll always print together. Cyan from a low, magenta from a high. It means that when price came down and back up, the momentum didn't follow. It's the easiest way I can describe divergence. It's a loss of momentum. When it happens 3 times, it may terminate the trend. And then we're going to add to that. Absolutely. Gary, if that number prints anywhere from 0 to 1,000,000, you have divergence. If the number is blinking, it means that there's divergence potential, but until the conditions are met completely, it's only potential. Does that make sense? Let's see if we can find an example of that. This negative number is printing, or it's showing and it's changing. There's a potential for a loss of momentum, but it doesn't mean that it's realized. Until it's actually realized, it's just potential. That's it. No number, no divergence. With the number, it's a visual that there was a slowdown. And guys, don't get caught up in the potential, because I've seen moves run 50 points with the divergence potential all the way through. So Rob, you can use it on the 13.2 for termination conditions. There's that magenta divergence high. Notice how price takes it out by a couple ticks. The trigger lines don't follow, and the market heads over. That's a termination condition. And then we'll use it on that smaller, faster chart, Ron. You may get 3 in the same area. Remember, what happens in 1 bar on the 13.2 may happen in 20, 25 bars on the 5.1. So when you see these 3 divergence on the smaller, faster chart, it's going to help you identify that change that's happening on the 13.2. Does that make sense? Cool. So we'll use this divergence 2 ways. If I'm looking for a trade, this is my indication that perhaps the conditions have changed. 3 divergences in the same location, and then if those small triggers get inside of the large, remember that trigger line lesson that we had a few minutes ago? Outside means odds favorable momentum. Inside means anything can happen. So we've had 3 losses of momentum, and we've created anything can happen. Even more powerful that the market may reverse. And then when that third pivot, that third divergence is higher than the previous from a low, or lower than the previous from a high, now we get that head and shoulders pattern. We're adding more fuel to the fire that the market may reverse. And if you'll look at this low and you'll look at this high, that would be your indication in a scenario like this. Maybe you have odds favorable momentum. There are no termination conditions, but your smaller, faster chart gives you 3 divergences here at the top. You lose momentum on the trigger lines, and you can see how it goes down. Buffalo Hands, I got your message loud and clear. Thanks for being here today. And then Gary gave us a great picture. No divergence on this pivot, no negative number. Divergence, losses of momentum on these pivots. Great picture, Gary. Perfect read. And guys, those 3 divergences can also happen from the top, right? This is the 13.2 chart. 3 divergences on a large chart is even more likely to change the direction of the market. Yep, that was perfect. And I think that's a great picture too. Guys, if you think you have a concept, you think you understand a concept, but you're not sure, take a picture just like Gary did, put it in the room. I will pull it up and either verify that you're seeing it perfect like Gary did, or we'll have a conversation about where you may be a little bit sideways. I find that that's very helpful for people. All right, so we've gotten through 2 of 3 rules, right? Making sure that we have odds favorable momentum, the advantage of momentum, making sure that there's nothing in the way, we have a clear path. Guys, where do those two rules come together? What chart are we looking at for rules 1 and 2? Does anybody remember? Remember, guys, this is your future. 13.2, absolutely right. So now we're going to refine that broad stroke of a brush, guys. We're going to go to our 5-1 chart. And rule number 3 tells me that I'm going to use a limit order, which means I'm literally going to wait for the market to come to me. We don't have to chase. I'm going to use a limit order to buy or sell a pullback. And a pullback is a small retracement in price. It means if everything's going up, I want it to come down a little bit. If everything's going down, I want it to come up a little bit. We're going to buy or sell a retracement, a pullback at an area inside of favorable large triggers. Guys, this is the wordiest of the 3. We're refining, we're pinpointing with accuracy where the market is likely to continue. So I'm going to say it in one breath. And I'm going to show you the picture and I'm going to remind you exactly what this does for us. We're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And this is going to provide you the advantage of an entry where the market is likely to continue. So during the live market, this will be the look of your 13.2 chart, guys. Everything is strong. There's nothing in the way. This will be the look of your 5-1 when the 13.2 is strong, has a clear path. Forgive me. This is where you're going to begin to look for an entry. This isn't your cue to jump into the market. This is where we begin to look. We're going to focus our attention on the 5-1 large triggers. They should be up. They should be strong. They should be like sharks preparing to breach. And we're going to identify the areas that are falling within them as they come up. Fibs, Fibonacci support or resistance, mid bands, or 1-to-1s. And it can be any combination of the 3. It could be just one of them on its own. But we always take trades from an area. An area is going to act like a backstop to help you. So with everything going up, with our areas identified, with our trigger lines strong, we want the market to go down. And we're going to wait for a reversal bar on our 5-1 chart. And this reversal bar is simply that red bar after a sea of green. It's going to be that green bar after all of these reds. And this signals the beginning of the pullback. And now we're going to focus on our areas for entry. You're going to build a window of opportunity. Your window of opportunity extends from your highest point of support, that's going to be inside of favorable large triggers, to your lowest point of support, inside of favorable large triggers, guys. This is the area where the market is likely to continue. You can use a drawing tool on your chart if it helps. You can do it mentally if you're comfortable with that. But once you identify this window of opportunity, your job as a high probability trend trader, because of the advantage of momentum on the 13.2, because the advantage of a clear path on the 13.2, and because you've just pinpointed that area where the market is likely to continue on the 5-1, you're going to right click and you're going to activate a limit order at the top of that window, right in that 79.20.21 area. And then it's out of your hands. One of two things are going to happen. Either the market's going to just embrace that momentum and go without you, in which case you have to be okay with that. You don't need to chase price to be successful. The other option, and really the most common option, is that price is going to pull back to that window and you're going to find yourself long at 79.21. A long position means that you've bought the market. You're anticipating the market to go up. You've used your advantages. You've identified your area. You've entered the market. Your protective stop will go below that window where the market shouldn't go. And I use that phrase because it's important when you're thinking about stop placement. Where the market shouldn't go. If the market breaks through a mid-band, support, a 1-to-1, and continues against the direction of the overall trend, we want to be out of that trade. This is one of our 20%. This is one of our costs of doing business. But I'll take this look 1,000 out of 1,000 times without hesitation, without anxiety, with zero fear. because 70 to 80% of the time, guys, this is my look. Target reached. When that market begins to move in the direction of the trend, I can reduce my initial stop below that pivot. Because we waited for the pullback, I've increased my profit potential. Guys, this is your high probability trend trade. This is the one that you're going to take 1,000 pictures of. You're going to annotate 1,000 charts. You're going to create trust and muscle memory. And you're going to be able to take this trade without hesitation every time it presents itself. Because it's going to teach you to read your charts. It's going to teach you to understand where the market is likely to continue, where it's likely to go, and where it's likely to stop. When you spend a little bit of time, that small drop in the bucket of your life, learning to read your indicators, it's going to take you to a medium probability trade. And this medium probability trade is defined when most indicators line up for a trade, however a small issue exists. Your ability to read your charts is going to help you identify that small issue. And this will be the vast majority of your trades, guys. Remember, that 50-50 trade with the perfect entry, that's a medium probability trade. You're going to work your way into that one quickly. When you're executing medium probability trades, you'll take these trades and manage them assertively. Your ability to recognize and read those divergences on a smaller, faster chart are going to let you do that. If there's trouble in your way, you may take a portion off at the position and reduce it to a zero loss level. Your chart reading allows you to manage trades, guys. It allows you to recognize in real time when maybe things aren't working out. So if you put a checklist, I'll be glad to show you, Rob. Great question. Let's do that, because you can't enter the market if you can't enter the market, right? So let's go to the live market real quick. And I'm going to click on Chart Trader. So if you're on 7, it's this gray arrow in the upper right-hand corner. And this opens up your Chart Trader. And this is kind of your mission control for setting things up. I'm going to click on these 3 little buttons. This is my ATM strategy. And you know what? I'm going to divert real quick, because while I love to give you guys fishes because they're so delicious, it's important to me that you know how to do what you're doing and where to find these answers if I'm not here. Guys, excuse me just 1 second. I need to grab a sip of water real fast. Back, and let's do this. So, Rob A., there's your software user guide that talks about it, but let's do this. We're going to click 3 little buttons. It's going to open up your ATM strategy. So we're just going to kind of put it together. You want to do 2 lots, right? So our order quantity is going to be 2. And then we're going to custom build. So we're going to have 2 targets on a 2 lot. We're going to have, 1 contract going for a predetermined profit target, 1 contract going for a different one. So I'm going to make sure that we're 1 contract on each. Stop loss for futures, guys, it's typically going to be 12 to 14 ticks initially. Remember that we're going to adjust it above or below that window of opportunity. And then we're going to keep it very conservative. We're going to do a $100 profit target on the first contract. This is an S&P, that's 8 ticks. We're going to do a $200 profit target on the second. This is the S&P, this is 16 ticks. And then now we just need to save it. We are 99% done. I'm going to right click in this gray area, and it's going to ask me to manage my ATM strategy templates, and it's going to have me name it. We can call it whatever you want. You can call it Ron's money making plan. And then I'm just going to click save. I hit Ron instead of Rob. Sorry, Rob. I'm going to hit OK. And then all of the templates that I create are right here in the drop down. So I can highlight whether it's your plan, whether it's the ES2 lot, whether it's a crude oil 2 lot. And then I'm good to go. When I enter a trade, and guys, not a real trade, my stop's in place, both of my targets are in place, and I've got that strategy in place. And guys, of course, we would never go long directly into a termination condition because that is financial suicide. So I don't even want history of that. So I'm going to get that off of my screen. Does that help a little bit? Good morning, Mike. Nice to see you. So guys, we're going to finish out. Safia, the link is like 2 inches above your post. Let's see if it's still on my clipboard. It sure is. There you go. And then if you need help with it, let me know. Guys, one thing that you should do every day for the first couple days, knock your charts out of whack. All right? Knock your charts out of whack. Set up a new ATM strategy. Know how to do it. Know that if you don't see any indicators, click capital F, and it's going to bring them back in view. If they're dead in the water, if they're not moving, if you don't see that black highlighted, you're going to have a white arrow. Boom. There's your white arrow. Now we're right back to where we were. And in this live market, we have small triggers through an area. Large triggers have not quite made it. This 87 area has the potential to break, but it hasn't broken yet, which means that I should have the picture perfect entry on my 5-1 if I'm willing to take an entry on a medium probability trade. This is your first medium probability. And this 50-50 look, my perfect entry on a 5-1 means that I have no divergence on that pullback, no negative number prints. It means that my trigger lines are strong. Nice distance between the two. See how it mirrors one to the other? And it means that my window of opportunity is tiny. It's concise. There's less options for this market to go and fluctuate on an area that hasn't broken. On a 50-50 trade, smalls are outside of the large. We do have divergence potential. This is the top of that window of opportunity. If divergence prints, what do I have to do? I have to cancel because it's not in my plan. And you having a plan is going to determine whether or not that's your trade. So guys, that's my segue to the second half of, or the last few minutes of the first hour. Having a plan, guys. You know, I say this about 1,000 times a day. I'm going to say it one more time today and probably again tomorrow. Having a plan that keeps it simple, that allows you to focus on the absolute best of the best. Guys, this is going to be your path to success. And here's an example of how to write a plan for a new user. Here's an example of how to write a plan for maybe somebody that's coming back to trading, that's looking for that consistency, that's looking to really have an advantage. And this is a plan to define your entry point, and that's all you're doing in the beginning. And you're going to use the phrase, my trade is the high probability trend trade. And in order to enter this trade, for me to activate a limit order, the conditions on this checklist must be met. And guys, this is your high probability trend trade checklist. I'm going to give it to you in the room right now. Take this, download it, make it yours, print it out, put it on your desk, right? Take a picture of it. If you have Snagit, get ready to post it on your charts. If all of the conditions of this checklist are met, I know that I'm entering a trade with a 70 to 80% chance of winning. I'm going to take pictures of my perfect entries. I'm going to put a couple of them into the spreadsheet to make sure that I'm comfortable. Guys, simplicity. This is an entry plan for a brand new user. It's about 1/3 of a sheet of paper, and it will grow as you grow as a trader. As you work into medium probability trades, you may have those situational exceptions. On a 50-50 trade, where an area has the potential to break, I'm going to insist that there's no divergence on the 5-1. I'm going to insist that the small triggers must be outside of the large on the 5-1. As I learn to read charts, this is my best chance of success on that 50-50 style trade. So guys, high probability, first 30 days, adding into your first medium probability trade, and each and every time you add a trade to your plan, you need to create a new checklist, you need to create pictures of the rules, and you need to practice and simulate. That was only entries. So now you're going to have to identify how to manage. Once again, we're learning to read charts for the first 30 days. We don't have those repetitions. Can't identify the divergences as fast as I want to, or the trigger line configurations. So I'm going to keep my management plan super mechanical. I'm going to reduce all of the fear, the anxiety, the hope, and I'm just going to keep it very disciplined. I'll trade 2 contracts, just like we set up. My initial stop will be 12 ticks, and it'll be adjusted above or below the window of opportunity initially. This is my first stop movement. If the market moves in the direction of my trade, I'll move at 2 ticks above or below that reversal bar. That's my second stop movement. It's very defined, very clear. There's no room for opinion there. I'll take profits on my first contract at $100 and move my stop to break even manually. That is my third stop movement, and it's based only on my profit target being reached. And then my second contract will be exited at $200, which means I'm looking for $300. My stops break even. I'm looking for that second target. I'm looking for $300 profit and a $200 move. And guys, a lot of the times you're going to hit it. And then a lot of the times you're going to have $100 in a break even. And that's okay, because all you're doing is nailing your entries, keeping it mechanical for management. And then as you start taking pictures of those perfect entries, you start putting them into your spreadsheet, you start recognizing the best of the best, your knowledge is going to grow on management. You're going to be able to understand when it's okay to hold for larger moves. When you have strong triggers and nothing in the way, you'll begin holding that next contract. So, guys, write a plan, or even steal this plan. Let me put it in the room for you. Let me upload the file. Keep it simple, keep it easy to follow, make your rules easy to remember, easy to execute, and write these rules on every chart that you show me so we can start looking at it. So there's the ES. 10 a.m. news, guys. And Rob, that's a great example. Remember we said news at 10 a.m.? So we had that high probability, manufacturing, JOLTS job opening, and you just witnessed why it's better to sit on your hands and go get a waffle. The patterns typically work even during news. The challenge is it moves so fast, it becomes difficult to catch them. So good stuff. Let me get this off of here. You guys can watch the ES sort out a little bit. I'm going to take a minute, guys, refill my water. If you take a trade, post it in the room. If you see something on your charts you're not sure of, post it in the room. If you have a question, post it in the room. Keep posting in this room. Clog it up for me. When I come back, we're going to start looking at the charts that you guys have posted. And then we're just going to do a lot of live market reading, guys. There's my picture letting you know that I'll be back in just a minute, guys. Give me just a few minutes and I'll be back. Here we go, back at it, second hour. So we've established our rules, right? We've looked at advantages. We've looked at entries. And I love what just happened on the S&P. You'll notice that this is not that best of the best odds favorable, right? This isn't that best strong trigger look. The smalls are breaking below the large, but it's not super cranking out. Smalls are a little bit outside, and it pulls right back to that mid band, right around 78. This loss of momentum, it pushes up a little bit, guys, makes it outside of that window. Some people may have stayed in, some people may have gotten out, but you can see how a loss of momentum, those triggers getting back to the large, can affect the size of the pullback. So I like that. Guys, I'm going to scroll up. We're going to go through. Let's start looking at some of the charts that you guys posted this morning. Hasn't been an awful lot of action this morning, but we're going to look and see what we had. And getting to the beginning of the day, yeah, not a whole lot going on. One thing I am going to do is I'm going to share this link another time with you guys. This is a link that John posted in the room. This is a 5-minute trigger line lesson that he put together, and it is spectacular. You will find it helpful in identifying termination conditions. Guys, save that one to favorites. That was a great post, and sometimes they get lost when we scroll through a little bit. So as I'm coming down, I'm not seeing a lot of trades yet. Joel, we got you here. All right, so let's go through and let's look at Joel's chart. He says a good bottom. Joel, are you with me here? And guys, I'm going to remind you that feedback isn't just for Joel. Feedback is for anybody and everybody looking at the chart. And I want to talk about a couple things here, guys. There's a best of the best look, right? There's a high probability trend trade. There is when all charts agree, everything says up, everything's good, nothing in the way. So what we have here is we have a strong bottom. We have a termination condition that creates a full reversal, and that full reversal gives us odds favorable momentum. So we can feel pretty good about the first part of our checklist. But then we get into, let me take a picture here. And I'm going to save it because there's a couple things that from the high probability trend trader standpoint, we don't have rules met. And I just want to pull this up and I want you guys to see what I'm talking about, because I'm going to go through not only what's amazing, but I also, if there's something that can be pointed out that'll be helpful for you guys, I want you to see it. And I'm going to keep the language that was there. No termination condition before the target. So guys, one thing that happened here, and let's get the right arrows for it, is price reached resistance, right? Give me a Y in the room if you see it. Price reached resistance. And the trigger lines are where? The trigger lines are below, yes? So if we're doing high probability trend trades, and guys, I always try to show both sides of the coin because I think that it's important to do that. If we're showing both sides of the coin, this is a termination condition. Guys, can everybody hear me? Awesome. So if we're talking about at 78.99 right here, this resistance, Rob, do you see it? Awesome. So this is our termination condition. Price reach resistance. All of the trigger lines remain below. At the time of entry, the large triggers had just begun rolling. So if I am trading a high probability trend trade, guys, this isn't my trade. This isn't the best of the best. But you're going to work into medium probability trades eventually. You're going to learn to create looks. You're going to begin to recognize patterns. Walter, it's not even a 50-50. It is smack dab into resistance that we don't know if it's going to break yet. Does that make sense? And let me go back to the picture. Price reaches resistance. Absolutely. Look at where all my trigger lines are, guys. Each and every one of my trigger lines is below that area of resistance. So just if I'm doing textbook high probability trend trade, it is by all counts an area that's likely to stop the market. Let me grab that YouTube link real quick. All right, maybe a little echo for just a second. All right, here we go, Joel. But let's look at the other side, guys. Let's not just say, well, there was a termination condition, there's never a chance for success. Because let's talk about advantages as we come through this area. One thing that we know is that termination conditions can reverse the market, right? Absolutely, Gary, 15 minutes till those. Well, and it does reverse the market, and it reverses the market really on every chart. So I like that advantage. The smalls are strong, the larger up. The smalls are strong, the larger up. The smalls are strong, the larger up. Guys, more advantages, okay? We have what's called a high volume area as you begin to work your way into that third chart, that 8-range chart, adding fuel to the fire that this area is likely to hold, right? So Joel may have been looking at this chart and saying to himself, I see so much up that I'm willing to take a chance from a great low point. And then Mike, 9 years of experience, is reminding us, don't trade into trouble, because we don't know if this trouble is going to break. Right now we have information telling us that it's not likely to. It may, but it's not likely to. So if you are not hitting that 70 to 80%, if you're not consistent, if you're really focusing on your rules, guys, this is a no trade condition, right? This is a termination condition. And if I take my checklist, is the market coming from a good top or bottom? Absolutely it is. I love it. Do I have odds favorable momentum? I can say that I do. No termination conditions. Guys, the second I have to click no, that's it. It's game over. Because I want to give myself every advantage. I want to give myself the absolute best of the best every time I risk my money on a trade. Does that make sense to everybody? I like to show the good in everything. I really, really do. But guys, just like Mike said, there's always another trade. There's always another opportunity. There's always the potential to make money. So you might as well take the best opportunities when you're doing it. Pivot stop out at the bottom here on the ES, and now look at us coming into resistance. Absolutely no trigger lines have broken through that area of resistance. Guys, it may break. This market may go all the way up to 5,000. But as a high probability trend trader, that's not my trade because of the challenges in the way. I don't have the advantage of a clear path. Joel, great picture. Thank you for sharing that. And guys, remember, when you break your rules and win a trade, that's just the market training you to break your rules. Look how that termination condition reacted even from a termination condition. Give yourself the advantage every time. Dab chain. Let's see what you did. Dab chain taking the same trade, it looks like. He has a termination condition here. Everything rolls. Takes that quick entry back, taking quick profits on the way up. And now we're into that mid band, those 1-to-1s. The large triggers are a full bar away. Loss of momentum. You get out without losing too much. Guys, this is the exact same trade. We're trading directly into a mid-band, and those large triggers are a full bar away. And if I go to termination conditions, right there in the manual, right there on Discord, one of my termination conditions is a large sharp mid-band if the large triggers are a full bar away. Let's see if we can find that live a couple times. Remember, when price accelerates away from those large triggers, if there's room for a full bar back, we see it again, it typically closes that gap. This is how you're going to identify a mid-band as a potential termination condition. And if we look at dab chains charts, whoops, I just minimized, didn't I? If we look at Dab's chart here, he's reached that mid-band and he's accelerated far away from those triggers, and it's just closing the gap, which makes this one a little lower probability. Great picture. And guys, there's some good chart reading there to help out. Joel, there's something wrong with your computer. Just in case he can't hear me. Guys, if you're ever having trouble, get with tech. Get with Jason over there on the tech side of things. He's brilliant. Let him help you out. Awesome. Let's go to the next picture. Guys, remember, just because you post or someone else posts, there's lessons for everybody in each and every one of these. Don't hesitate to ask a question. Don't hesitate to point something out. Jose, you weren't aware of the time and it caught the news. 50-50 trade, it pulled back. You were able to get out, and look how it slipped them. 84.50. Look where that stop is. Guys, that's why we don't trade into news. Jose, that's a good example of it. 50-50 with a divergence. Even the pattern is lower probability. And then that news slipped you. I'm glad you were able to get out for a small loss. Good job. Mike says, here's a simple trend trade. 13.2 confirms the trade, higher divergences, odds favorable momentum coming from a termination condition. There's a pullback directly to support inside of favorable large triggers, and he gets a little market flow confirmation using that other chart just to help him come through. Mike, you're doing Apex now. Cool. Guys, I want you to know something, and this is such a great thing, is we have users that stick around. Joel, you didn't do anything wrong. We have users that have been trading Nexgen 17, 18, 19 years, and they come in and they post in here, and Mike is a gentleman with almost a decade experience with us, and he's still showing you guys a high probability trend trade. He's still showing you guys the best of the best. Jose came up behind him with the exact same trade and showing the aftermath straight to the targets. When you have odds favorable momentum, guys, when there's nothing in the way, when you wait for that pullback, this is your foundation. This is the one that's going to teach you to develop and build a plan that probably goes outside of that high probability trend trade. Jose, that one was picture perfect. That's the market giving it back after you didn't notice news. NG time. I'm going to take a picture of your picture just so I can blow it up. I'm not sure why, but yours always come up a little bit smaller for me. So as we look on the 13.2, the smalls are kind of working their way below, but we don't have that odds favorable momentum, not just yet. And I think we talked about this one when it happened. You were losing a little bit of momentum here on the 5.1. So instead of getting in at the lower area, right, you get in at the higher area. And NG, this is a beautiful read of your indicators. Why do we get in? And it opens up a little talk about our entries. And I want to show you something. In the very beginning, you rely on that odds favorable momentum. because everything is screaming in the direction of the trend. And you look for that entry at the top of the window for longs, at the bottom of the windows, because your 13.2 says that the market is moving in that direction with a ton of momentum. So here's your best of the best. NG's trade is somewhere down here. We're losing momentum, but it's still favorable. It looks good. And I absolutely love the way you handled this. With a loss of momentum, he can say to himself, well, it may come up and retest a higher area. Love your entry using Fibonacci resistance, using the mid-band, getting it a little bit beyond those trigger lines, beyond that lower point of the window. Guys, this is Chart Reading 101, and you absolutely nailed it. And then there's that first target coming down at the low pivot, probably a first trouble spot. Second target's down there a little ways off. I like everything about this trade. It's that recognition of a loss of momentum that puts him in at a higher point. He's able to increase profits, able to reduce risk. Nice job. And then Jose, 50-50 trade coming to the downside. That's that same thing. That's that loss of momentum, right? We've already lost that momentum. One of the keys on a 50-50, I'm going to take a breath. One of the keys on a 50-50 trade, guys, when an area has the potential to break, get the advantage of momentum, because if you're small issue, remember, a 50-50 or a medium probability trade means that most of the indicators line up, but a small issue exists, right? Let it be a small issue, a small issue. Don't let it be several small issues. If you're going to have the issue of an area that hasn't broken, you should have the advantage of momentum. And when you start working through a little bit, and now you've given up the advantage of momentum, and you've given up the advantage of a clear path, you still have an entry inside of favorable large triggers, but you've also got a loss of momentum on the 5-1, a loss of momentum on the 13-2, an area that hasn't broken. And guys, look what happens. It comes and retests a little bit. Jose, you're able to do all right on this one. But give me a why in the room if you can see it. How you can make a conscious choice to have advantages. You can make a conscious choice to recognize the best of the best, and then it's only up to you whether or not you're going to commit to it. Jose, your ability to read charts helps you manage this, but if you're one of my new traders, don't have the advantage of momentum, don't have the advantage of a clear path, Jose's ability to read charts and recognize keeps him from giving anything back on that one. So very well managed. Medium probability trades must be managed assertively. Nicely done, Jose. And then NG, we've got one more for you here. And let me blow it up so I can see it. Darn these old eyes, right? So NG, you're looking at one of those 50-50 trades. That lower momentum didn't work out. The market ends up reversing. You're getting multiple divergences. Everything rolls. Large triggers roll, full reversal. What we're seeing here is a little overrun, right? A little overrun of that key Fibonacci area. And then he gets odds favorable. Strong triggers. Smalls have cleared the area. And I love this look. I say love a lot, right? No divergence. Small window of opportunity. NG, this is an absolutely picture-perfect 50-50 trade. Strong triggers, the best momentum you could have. Smalls clear, larger coming up strong. You've got that little window of opportunity with absolutely no divergence. And you're aggressive. You take profits, you're good, getting in, you're not willing to lose. Nice job. Nice job. Rob A, 3 rules only for you. I like it. Embrace it. Follow it. Rob A, let's start seeing some pictures from you. Showing me those pictures. ATM at 10, 20, and 30. I love it, NG. You've already got, what, $300 in the bank on this trade? And you're guaranteed another 120 no matter what happens. What a great trade. For good this time. Yeah, I saw that this morning. Apparently Fox is giving him like $370 million to be a commentator. I think that's going to be great, having someone with that experience talking about what he sees. All right. Dab chain, you said in 90 minutes you banked $17.50. Man, it's not the class. Dab chain, it's you. It's you creating a plan. It's you following a plan. It's you executing the plan. Nice job. 39 trades, guys. 33 winners. 84% win. I like it when you guys show me that. Be excited about being successful. You work hard to get that level of success, guys. Embrace it. Show me. Yeah, today only, Jose. So there's that one that NG just showed us, right? 50-50 trade. No divergence. Pulls back. Coming into that trouble spot. Now we're a 50-50 trade. Areas with the potential to break but haven't broken. And now you have a divergence. Now you have small triggers working inside of the large. Should we watch this for a second and see how the market reacts as we begin to lose momentum on an area that hasn't broken? It might go, right? It might go up and rocket all the way to the moon, but I've taken away that advantage of momentum. And if I'm a brand new user and I'm embracing that plan, this isn't my trade. Everybody's different. News in 1 minute. We have 10:30 news today. Oh, yep, crude oil inventory. Thank you for that. Guys, crude oil inventory is coming out in 1 minute. Let's keep crude oil up. Let's see if anybody reacts to it. And FOMC day is making the ES chop. Great reason to follow rules today, isn't it? There's that 50-50 with divergence. You just got stopped out if you took it right into news. Guys, some days the market is like an ATM machine. Some days it's a little choppy. Our job is to follow the rules. You can form an opinion about inventories, but if the rules aren't met, there shouldn't be a trade. No worries. Joel, the trade you placed, I'd love to. There's that news reaction, right? Before class, you were at 21% winners, Dab. After class, you're at 84% winners. Tell you what, that's a nice ego stroke. Thank you for that. But guys, I always say, teachers only as good as their students, right? And Dab, you've been a great student. You posted charts. We identified a pattern. You corrected the behavior. And you started finding the success that you told us you wanted. I love it. I just gave you the elliptical. You got on there and started sweating. So great job, man. All right, Joel, are you with me? So here's a picture of your trade, right? Cool. So we're going to go through and we're going to talk about it just like we talked about it a minute ago. Let me get all this stuff off of the chart. So you start off by saying you have a good bottom. I agree. This is a termination condition that's creating a full reversal. So that first one on the checklist, Joel, let's put your checklist on there. Every trade, right? Is the market coming from a good bottom? Yes. So we're 1 for 1. Do I have odds favorable momentum on the 13-2? My small above the large, is the large beginning to turn wide, angled to the direction of the trend? Joel, another yes, right? So we're putting the checklist to this trade. We're staying on the 13.2 because that's what leads the way. No termination conditions on the 13.2. So Joel, this is the third condition. You put no termination conditions. I respectfully disagreed with that indicator reading there, Joel, because price had reached that area of resistance. And Joel, where are your trigger lines? They've all remained below that area of resistance. So you've gone outside of the scope of the high probability trend trade because rule number 2 was broken. It means that you have to put that no, which means that you have to say, all right, no trade. If you're really being consistent, no trade. I came through and we talked a little bit about some other stuff where you had trend, you had momentum, your triggers were rolling, you had an HVA line. You had reasons to potentially go long. Maybe if you're an experienced user, you're willing to take a shot at this one. But guys, if you don't have the reps, open a chart and look at how many times termination conditions stop the market cold. How many times areas are reached. Guys, because you're not the only people that know about these areas. We're very fortunate with Nexgen. These Fibonacci, these key areas, guys, deep pockets, institutional traders, these guys see them too. And when they see them, they react. So as a brand new user, as someone looking for that consistency, guys, it's okay to sit on your hands and just skip the trade. Don't trade into trouble. Have the advantage of a clear path if that's what your plan is. And that means that sometimes you've got to give up the desire to trade what you see and trade whether or not the rules are met. Does that make sense, Joel? I think you had a lot of reasons, but I know that as we're going for consistency, looking for that best of the best, got to respect that termination condition just a little bit. Great post, though. What an awesome picture with some great lessons in it, right? Strong bottom, momentum, entry. So Finch, if you're with me, we just did the exact same thing here, right? We let a strong bottom cloud our judgment directly into a termination condition. Do you see it? I love the potential turning point here. I really do. I think it's amazing. Man, when I've got divergence right at a fib, I love it because it sets the tone. But even with that tone set, my biggest advantages come from an area that's already broken, or at least the small triggers are far enough above that it has the potential to break, which means that if we're trading into a termination condition, I can't really have an entry area because my rules aren't met, right? And you can see that with this momentum, it comes up and it retests it. It comes up and it retests that area, and it pushes all the way down to 75.75, which means that into a termination condition with 2 divergences with a trend change, you kept at least 4.25 points of risk on this trade, with everything saying that we're probably not going to break this area, which means that your management plan was revolving around hope just a little bit there, Finch. Would you agree? You were really putting all those eggs in the basket of a strong bottom. And I understand completely why. Once again, these strong bottoms are a great indication. They're wonderful. But if you're going to take a shot, maybe no losses of momentum, right? Maybe let your large triggers get above the area. It's okay to let areas break, guys. Something's going to happen that's going to create an opportunity. You guys are witnessing that fight in the market right now. Buyers came right off of support, 50-50 at resistance, and if I'm not mistaken, had a little bit of divergence, and then it didn't work. Right to support, right to another 50-50 at divergence. Trigger lines are split and weak. And now we finally broke, right? Now we've gotten out of that range. Now we have smalls above the large are wide. If I'm a high probability trend trade user, I'm identifying a potential window of opportunity with no divergence, with strong trigger lines. And we're going to see what happens here. Is everybody with me on what they're looking at? This would have been my entry if I were taking this trade. My initial stop would be somewhere down here below the window of opportunity. I've got a divergence high that my large triggers haven't broken through yet, which means that I have an area with the potential to break but hasn't broken yet, right? Not high probability. This is medium probability. And it's probably going to tap me out of that one. There it goes. And that's okay. This would have been a medium probability trade after consolidation. And now as price pulls back and reaches support in a mid-band, the large triggers are still up, we go into a little bit of a holding pattern. If a good look doesn't work, sometimes trigger lines will roll, give you a second opportunity. But guys, that's how quickly you can begin to identify. But does everybody see why that wasn't high probability? And I think this is important. We had a divergence high. Trigger lines hadn't broken. We did have odds favorable. It had the potential to break, but it didn't break. And now there's some users, I don't even have one. When you have situations like this, they may go to a higher time frame for a tiebreaker. Awesome, Mike. Are you looking in Texas again? Or did you end up in Texas? Oh, nice. Potential to break, and it doesn't. Very good. I'll give you a shout later. I got your number. S&P still fighting. Still fighting to get through that area of resistance, isn't it? Ron C, with a little different approach typically. He's probably going to show me a trend trade just to throw me off. There's also users that with odds favorable momentum and all the areas cleared, Ron takes a little different approach. Look at this plan. In after trouble, clear path, out before trouble, and then follow the stop on the second. This is a great example of taking these indicators, of grabbing the software, of doing the study and understanding advantages, and then taking those advantages and developing it into a plan that works for you. And Ron, you've done a great job of that. Nice job. All right, Claire. Guys, for those of you that are brand new, this is what we do. We talk about rules and we talk about what you see and what you're doing. Claire, you had a 50-50, right? You chose not to take it. Price accelerated away from the large triggers here right at the 10 o'clock hour. I can't tell if you got in there. 10 o'clock. I think this is it right here, and you labeled this as a vacuum. Price accelerates away. It's a 50-50 trade, but those large triggers are a full bar away, and it pulled right back to those large triggers, it looked like. You took a second entry at an area likely to stop the market, took profits at your trouble spot. Coming down this way, here we are. Resistance likely to hold based on trigger lines. Target reached, momentum style to get right back up to resistance. All right, it took me a second to get with you, but I like it. There's the trend trade short with a clear path. Doesn't work out, and then the market pulls up to an area likely to stop it using that termination condition knowledge. Taking a beautiful trade, getting it all back plus some right down to the trouble spot. And then when this termination condition gets everything on the right side of trigger lines, you take one of those momentum style trades and you make money on the way up. Nice job. Great trading. Beautiful chart reading. And then that 10 a.m. news on there. And now we're coming through. That was your long over here, profits taken. And then you get one of those 50-50s. You had your momentum. Target reached, stopped, hit, momentum style up, target reached, stop, hit. And now you have a 50-50 style trade. And it doesn't look like you took an entry. And guys, when you see that consolidation, when you see that big fight, I like it. You've got split triggers, not trending one on top of the other. Just working to get through that area. Nice job. Everything goes back to chart reading, doesn't it? Guys, there's that 50-50 on split triggers. You might have got in and managed out, but they haven't been able to break this area yet, guys. This is a great time to remind you where you sit in the food chain of day traders, and I love this. It's my favorite picture, guys. Two types of people in the market, okay? Know which one you are. There is sharks, and the sharks are the guys that create these tops and bottoms. The sharks are the people that see these areas, that respect them for targets, that use them for taking profits, for entering trades. These are the people that set the tone of the market. These are the men and women trading for institutions, really trading thousands of contracts and making things move. As a Nexgen user, you can be a remora. Everybody familiar with the remora? All they do is they follow the sharks around. They let the sharks do the work, and then they just take advantage of all that hard work, taking little pieces of what they've created. Guys, this is what we do as Nexgen users. When we are looking for those trades, we're letting the sharks reverse the market. We're letting the sharks establish the momentum. We're letting the sharks put their eyes on the prize up at the key Fibonacci area. And then, guys, this is your remora piece, right in the middle of that move. Not at the beginning, maybe not even to the end. This is where Nexgen users get to take advantage of all that hard work, letting the sharks be sharks. If you try to predict the turn, the sharks eat you. If you try to fight their momentum, the sharks eat you. And I love this analogy, and I use it myself a lot when I'm just trading. I'll go up. What are the sharks doing? Guys, the sharks have decided that 8250 is a line in the sand. How many times have the buyers banged their head on that area of resistance? What have the trigger lines done? They've never followed through, have they? So if the buyers can't get through 8250 and the sellers have been unable to push beyond 73.25, can everybody see how we have a very clear line in the sand? In order for me to feel comfortable about taking a trade, to truly believe in that advantage of a clear path, this is the box that I'm going to let the sharks get out of. And then when they do, when I have odds favorable momentum, when I have no termination conditions, when I can pinpoint an area for continuation, guys, then I'll take a shot. Does that make sense to you guys? 90% of what we're doing is just reading our charts, right? Making sure that we have those advantages. Embrace those advantages, because it's those advantages that get you paid. 50-50 look, right? Small triggers below, large triggers above. No areas inside of favorable large, so no rules met for an entry on the 5-1, but we're still in 50-50 mode, right? If you're super conservative, divergence says don't take it. If you're willing to take a shot because your plan says, okay, I can identify everything, the fight's going on. There's the bottom of your window. There's the top of your window, guys. This is an area with the potential to break with a loss of momentum. How many issues are you willing to forfeit and still take a trade? How many advantages constitute reasonable? Look at where your synthetics are, all the way up here. Look at where your large are, all the way down here. Your trigger lines aren't trending one on top of the other. You've had a loss of momentum. You have an area with the potential to break but has not broken. If you vocalize and verbalize everything that you see every time you start to go into a trade, what are my advantages, what are my disadvantages, but more than anything, what do my rules say? Does everybody have that checklist up on their desktop, pen on the ready? And then more importantly, are you using it? How many times will you say you're using a checklist and break one of your rules anyway? I've done it at least 1,000. At least 1,000. Because sometimes if I follow my rules, it keeps me out of a trade. And that's not nearly as much fun as getting into a trade, is it? John Horde, let's see what you're doing, my friend. Looks like you're doing just fine. Everything says up and you go short. I don't understand that trade, especially without reference. Everything still says down, you go short, right into support. And then everything says down and you go long and then take money. And then everything says up and you go short. Guys, this is one of the reasons where your rules help me a lot. This is one of the reasons why I ask for 2 charts. Because, John, there's no doubt in my mind you have a pretty good plan of what you're doing, right? But everything says up and you went short. Everything finally says down and you went long. Everything says up again and you went short. Everything says down again and you went long. And then trigger lines are still going up. The smalls are down and you go short. So for someone that has absolutely no idea why you do what you do, it looks crazy on a 5-1 chart, doesn't it? It feels like you're fighting at every turn. When chances are the reality is that you have reasons for what you're doing. So guys, if you're going to post in the education room, do me a favor. Give me an opportunity to educate. Give me an opportunity to know what you're doing. If you want to post charts to show off your numbers, that's cool. $1,400 is great. Is fighting everything on the small chart a way to consistency? It may be for you if you have a plan, right? Guys, I'm not here to knock anybody's plan at all. I'm not here to knock the way anybody trades. I'm not here to talk down about what you're doing. Sometimes I'm just seeking to learn. I'd love to know what you saw on a larger chart that helps you make this decision, because it might make me smarter, right? So just something to think about when you post in the room. Give us a little bit of information, because we are all here to learn. New users, my brand new people, don't do this in the first 30 days. That's going to create challenges. And then there's that Fibonacci support, guys. They reached it. They fought, they fought, they fought. Sellers took the lead. If you took the trade, you had to be outside of the large triggers, but it worked out for you. If you didn't take the trade because you didn't like the divergence, because you didn't like the split triggers, well, then you have to be okay with it going without you, right? My plan says, and if my plan says that this is what it takes to get me in, guys, anytime that plan isn't met, you have to be comfortable with not taking a trade. For the first 30 days, your adherence to the plan should be just almost religious, right? All right, I'm going to share a picture with you as we go to the end of the hour here. And I shared this picture at the very beginning, guys. How do you get to where you want to be? Well, we've talked about it. Post your trades in class. Annotate your charts. Make sure that you're following rules. Keep it simple. Simplify the number of looks that you're willing to commit to. Simulate your trades. Don't practice the wrong trades. You never post another trade without a checklist. And you know what, Joel? If you do, I know what you're looking for. You've been in class long enough and you've given me so many annotated charts. I know exactly what you're looking for in a trade. So I could probably still go through and hold you accountable, but I like that you'll do that because what a great habit for everybody. Put your checklist on, right? Guys, do market replay, retrade the day, take those pictures, repeat the process until you always take the correct trades. Not until you win every trade, because guys, that's not realistic, is it? You're going to lose trades, and the sooner you accept that not every trade is going to work, typically the sooner you start winning more trades because you stop trading not to lose and you start trading because rules are met. Then tracking in a spreadsheet, and that's the one that I want to cover in the last couple minutes here. Nexgen's provided you with this amazing spreadsheet. If you're brand new, it is in your study pick section, and it's right there, and it's just waiting for you to use it. Page 1 is your trade tracking sheet, guys. Everything that you do, every trade you take should be in this tracking sheet. The chart should be annotated, and when you put it into your tracking sheet, you should know what happened. There should be a link to the picture. How did you feel? What happened afterwards? Was there any takeaway points? And I'm going to show you a picture of my favorite spreadsheet ever. And this was posted by one of our users going through the same educational process as you, but made the commitment to do it right. And this is her page. Look at all of these trades. Everything she does, she puts into the spreadsheet. She lets you know whether it's simulation, whether it's replay, what the date was, how she felt getting into the trade. Did she break rules? Did she follow rules? Was there a chart reading item that would help? What was her result? What happened after? Guys, this is probably one of the best uses of a spreadsheet that I've seen. I can tell you before I went live the second time, I filled up 3 pages of this tracking sheet. 3 pages of trades, of annotations, of feedback. So you're going to use this one to develop an awareness of the patterns in the market, but also the patterns in yourself. I traded into termination conditions a lot in the beginning. I love termination conditions. If there was a red line, I traded into it. If there was a blue line, I upped my contracts hoping that it broke. And guys, this was my Achilles heel in the beginning, and I had zero idea that it was until I started posting in the room, and John Novak said, "Hey Mark, I'm starting to see a pattern here. You keep hoping that these areas will break and they keep taking your money. So you really need to work on fixing that." So I started fixing that. And then I wrote out my plan and I said, all right, I'm going to commit to a plan. And I started taking pictures of my favorite looks. Not only did I take pictures of the trades that I was taking, but guys, I did that study process. I started backpedaling days, months. I started using market replay. I started honing in my ability to recognize the perfect trade. I posted it in class with my rules written on the chart. And if I had made a mistake about my rules, I got a little clarity, I got corrected, I got nudged in the right direction. As I began to work on management, I started filling up this section. Every time I could do something better, hold longer, I started filling up management. As I began to recognize chart reading, like that gap theory with the synthetic with the triggers, when price pulls so far away that price snaps back, I started taking pictures of this every day because I was the king of fighting that vacuum. And guys, I recognize these patterns through feedback. Termination conditions. I started taking pictures of termination conditions because they were my weakness. So guys, using the spreadsheet, right? Using that trade tracking sheet, using market replay, using the room for feedback, that's what's going to get you to where you want to be. So now it's your turn to make that commitment. It's time for you to write your plan. It's time for you to commit to your rules. It's time for you to post your trades in a trade tracking sheet and to post them in class to get that feedback. And this is one of the things that Nexgen is going to help you with every step of the day, every step of the way, is hitting those goals that you've set for yourself. So on that note, guys, crude oil, super loss of divergence into a key area. The S&P finally broke off of that resistance, and the sellers for the win, right? Those seller sharks, you can see the fight that they put up, and eventually they get down to that termination condition, and now it's just a matter of whether or not they have a lower number in mind or if they're willing to give up the reins and allow the buyers to take over. Guys, I'm going to take just a minute, reload my water one more time, and then we're going to finish the last hour strong. The last hour, I want your questions. I want your pictures. You tell me what we're going to talk about. There's nothing off limits. If you're in here with a demo, if you're in your first 30 days, guys, and you're still looking for that little bit, if you've never posted a picture in the classroom, post a picture. I don't care what the picture is. It can be your favorite website. It can be a picture of your dog. Show me that you can take a picture of your charts, of your screen. Post it in the room. Label it test. Let's start building the good habit of you posting your trades every time you take one, of you posting your questions. And I promise I'll give you feedback on each and every one. I'll be back in just a second, guys. Somebody start us off here. John Novak says he'll start us off here. I love it. I'm going to open up a link. This is crude oil. It's a 50-50 trade, right? We talked about this one as it was setting up. Everybody's going to have different sets of rules. Everybody's going to have a very clear path to what will get them in the market. You'll notice that it was a 50-50. I kind of like the way he handled this one. Lots of momentum, but there's a slowdown over here on the 5-1 because of the momentum, because of the direction, because of the divergence at the top, because all of his trigger lines have rolled. You'll notice that he takes a more conservative entry. He gets in a little bit higher with the slowdown, and he has the target down there at Fibonacci support. And if I'm not mistaken, that one made it right down to Fibonacci support. It's using advantages, right? It's using the advantages that you read from your indicators. There's that first one, target reached. And then as everything begins to break through, you'll notice that he lets the trigger lines work their way down. He lets the small triggers roll. And then he looks for his opportunity after the Fibonacci area breaks. Guys, this isn't high probability trend trading. This isn't first 30-day trading, but this is exactly what you can look forward to. This is the direction that you should be headed. You're just at the beginning of the path. You're not at the end of the path, and it's okay. Allow yourself to be where you're at. I want to come over to the Discord page, and I want you to see a lot of things on this one, guys. This is really one-stop shopping if you're brand new to the software. The first section is self-training. I want you to see this because in the self-training section, there has been really just an outline. How do you get to where you want to be? And I love this first statement. You're here to make money. And there's a little disclaimer in there. Everything to get you in the right path. Guys, links to the user guides. It's that NinjaTrader user guide to help you with NinjaTrader questions. Links to the tutorial section. But then the one, everybody's goal, right, is chart reading. There's about 75 to 100 pictures of chart reading in here. You should start going through, looking at these pictures. And if you have a question, posting that question in class. As you grow, there's advanced chart reading. There's example trades coming from this room, coming from the traders chat room, a place for you to ask questions. But if you're a fly, I want you to play fly on the wall. I want you to go to the traders room. I'm not sure if you'll have access to post if you're on a demo, but what you can do is you can see all these different people, some of them taking the same approach that we talk about in this room, some of them using their years of knowledge, using different charts, different looks, everybody taking that Nexgen software, creating a personalized plan, a personalized approach, and getting the most out of it. Rob A., I love it. We got a picture from you. Ooh, let me see if I can blow that up. I can't even see your checklist. That's okay. No trade per the 3 rules. You bet this turns into a pivot stop loss. So let's see. No, you're okay. We're going to get there together. I'll put a checklist on it. I love that you're doing this already. Posting these in, right? I'll put my checklist on it. Just visually, it'll be a little easier for us. Is the market coming from a good top? I like it. These are termination conditions that create a full reversal. Nice job. Do you have odds favorable momentum? The smalls are outside of the large, but they're not quite really that best of the best look. And then we're trading right into an area with the potential to stop the market, the termination condition. And I like it. You didn't take a trade. You said that the rules weren't met. But then you also recognize that it's probably going to pivot and stop out. Great chart rating, Rob. And that's exactly what that is. You don't have to pull the trigger to get information off of a chart. You don't have to be in a trade in order to reap the benefits of learning how to read your indicators. Guys, this is that one. Don't trade into an area. Let it break. And when it breaks, creates the opportunity, and it goes down. Nice job. No problem pulling the trigger. That's the problem. Yeah. I think we all do. Because when you pull the trigger, there's that adrenaline rush. And when it works, there's that dopamine kick. And you're like, oh, this is great. And you're like, what rules? I want to point out something on John's chart here. Guys, this has nothing to do with whether it's a rules-based trade, whether it's not a rules-based trade, whether the entry, I don't care. I want you to see something. Odds favorable momentum in a downtrend. Okay? Odds favorable momentum in a downtrend. Guys, the market went down. Every chart was red. Every chart had strength. Every trigger was facing the same direction. There was a gentleman that trades, and his phrase was, wait until it's obvious. And that word obvious used to bug me, because what's obvious to you may not be obvious to me. And then I started looking at his charts, because I can be taught, and all he was saying is that if every chart tells him the exact same thing, he's taken that trade. If the direction is consistent, if the trigger strength is consistent, if the path is clear, guys, that's your best chance of success. And then you'll go from taking the high probability entries to beginning to add to that, to really growing, adding arrows in the quiver. And you'll get there. And now, Rob, I think this was your picture, right? Termination condition. There's those three divergences in the same general location, right? So Rob, you used chart reading to create an expectation of what the market was likely to do, and it did it exactly. Isn't that pretty cool? So you've already begun that process of respecting termination conditions. You've already begun that process of identifying change on the smaller chart. So then the next step is, when I know I can't go short, I have to start asking myself, well, what has to happen in order for me to go long? Well, the first thing that's got to happen is I need a slowdown. I need triggers to start rolling on my smaller chart. I don't want to fight this trigger look. I need to make sure that I have a clear path. You notice that resistance with all the trigger lines below it? Look which direction the market's pushing off of it. Pretty cool, right? So because of my chart reading, do you know what I've decided it's time to do? Not a darn thing, guys. Not a darn thing, because I don't have any rules met. Joel, the clear path was my biggest problem in the beginning. And I find that it's a lot of people's. And as you grow with the software, true story, you're going to begin to recognize when it's advantageous to take a shot. What's the phrase? Learn your rules like a master so that you can break them like an artist. I'm not advocating breaking rules, but what I'm saying is that with enough repetition, with enough pictures, with enough experience behind you, just going through reps in the software, you're going to begin to recognize situations where that Fibonacci area has more of a chance to break than it does to hold. For example, coming from a great top or bottom. Super odds favorable momentum. Every trigger line down, an experienced trader will begin to say, well, you know what? Maybe I'll take a shot. Joel, this is yours from earlier, right? We're into that resistance. You're getting excited, starting to chomp at the bit, looking for that opportunity. Let the sharks work it out. Gary, and I absolutely love that you put a checklist on every one. If the 13.2 suggests the termination is true, we know that it did because Rob showed us that great picture of it. No triggers beyond the edge of Fibonacci. You identified that they did overrun a little bit. I like it. See that red X? I'm getting better at reading your checklists, but I just love it because Gary's got a checklist, everything he does. HVA at the same spot of wide, small, or both triggers. He did have it. Trigger started to roll. And if the target is reached, including the midband prior to entry, cancel the trade. And then, Gary, what you were looking at there is what we were just talking about. On your 13.2 chart, it's trying to push through that area of resistance that it hasn't gone through yet. So your target was reached. And then you come back, that looks like the same picture, a little bit of the aftermath as it tries to work its way through there. And then if I come back to it, it's starting to work above. And now we're starting to get that idea that yes, maybe the S&P has put in a bottom. Maybe those sellers have reached their target. They wouldn't let the buyers get above Fibonacci resistance. They unloaded both guns straight to support. And now we're seeing that changing of the guard. Notice that your large triggers on your 5-1 have already rolled. And now they're starting to work their way above those synthetic triggers. But as I come into the midband, look at where my synthetic triggers are. Look where my large triggers are on my 13.2. As I come into this midband area, these 1-to-1s over here, notice how they're still down, how they're all the way down here at this reversal bar marker. I don't have odds favorable momentum to the upside. Give me a Y in the room if you can see that. In order to have odds favorable momentum, my trigger lines have to agree, right? If one is down and one is up, X marks the spot, guys. Not a high probability trend trade. Doesn't mean that it won't go up, but it means that because all the triggers are below this, because I don't have odds favorable momentum, guys, that checklist doesn't stand a chance. And it just gives you the opportunity to stay a little patient and wait and see what happens. There's always going to be more. You don't have to be first. If you got in at the blue line because you wanted to be first, you got run over. If you did it a second time, you got run over. When those triggers rolled, it created a better chance. And now if these triggers roll, then guys, we're looking at advantages again. Everything I do is chart reading. Every time I look at a chart, I have to make a decision based on what the indicators are telling me, not on what I want to have happen. All right, I'm starting to ramble. What do you guys want to talk about? Give me a topic. Show me a picture. Let me know what's on your mind. And let's get next level, right? All right, so on John's chart where momentum is down, how do you get in? Not going to pull the trigger on that until I'm consistent with the 3 rules. Normally, you would just sell it. So let me go back to John's. And guys, I don't mind sharing John's charts. I don't, because I think it's pretty cool when you see where you're headed. So the one thing that you can't see on here, Rob, in NG time, nope, there was a switch made. The synthetic on the 5-1 is the 13 large. What it did, it gave some great continuity and a little more clarity and kept people on the right side just a little bit longer. We found that it was very, very helpful. If you run the installers from the resource page, it'll get you the template. John may also have the template somewhere on the Discord section, so you'll be good. All right, so Rob, what you don't see on John's chart is a market flow chart, that 8-range market flow chart. And that market flow chart really becomes kind of a tiebreaker sometimes, or when you have an area that's likely to hold, but you want a little more confirmation. There's an 8 range chart that'll give you that little bit of confirmation. So what he did is he said it's not the best momentum, but the area is clear. Everything says down, but I have some divergences. He goes, I'm going to let that market flow chart, that volume indicator, give me a signal to let me know that it's cool to take the trade. So what he did is at the time of the trade, when it was time to go, he waited for probably one of these short signals, either a magenta arrow or one of these antenna bars, or on his market flow chart, he may have had one of these yellow reversal bars right at the area expected to hold to the downside. And I don't have a market flow chart built, but let's build one real quick. Why not? And let's see what happened there. So I'll tell you what, let's go through the process of building a new chart. You're going to go File. No, Rob, market flow is a confirmation tool when the rules are met. I'll show you exactly. Was that an ES trade that he had, or was it a... Okay, it was crude oil, so I'll do a crude oil market flow. 8 range, 10 days back, and we'll let that populate. And this is where new users go a little bit sideways. When I got a market flow chart, Rob, I took about 700 trades that day. It was a little embarrassing. So when we talk about market flow, the key to the understanding is market flow signals generated when the rules are true. And this is the most important part. If you try to take every signal on a market flow chart, you're going to trade 1,000 trades, and they're not going to have established rules met. So what John did, and this is the spot right here, right around 1055 on market flow. John said to himself, when everything finally gets below, when everything's finally working through, and let's pull his picture up again. When the trigger's clear, that 38 area is the area that I really expect to hold. So right here at that 38 area, he gets a reversal bar signal right there. So when he has every advantage but wants just a little bit of confirmation, he's willing to spend a couple ticks with that confirmation. Does that make sense? Yeah, I love it. So what I do initially, and I'm a big fan of market flow. I think that there's a lot of information. It can be overwhelming in the beginning. So in the beginning, when you first start, use it to confirm, excuse me, odds favorable momentum. You have strong triggers on your 13.2. You have strong triggers on your 5.1. There's that circle. As it's pulling back, you had that smalls outside of the large on the 8 range. That's a great way to introduce yourself to market flow. Same one, you're just taking off, you're just looking at triggers. And then you can come in and reload that market flow. Remember guys, these are just tools. And you got to learn how to swing a hammer before you get to operate the pneumatic nail gun. And then one thing you can do, Rob, is you can start looking. Let me tighten this up just a little bit so you guys can see it. So price reaches support. No trigger lines go through. Price reaches support, multiple divergences. And if I look at an 8 range chart, I have support, I have divergence, I have what's called an antenna bar, and then I've also got this look, which is a good market flow look. I've got a magenta dot down at the very bottom of that bar at a termination condition. This means that the sellers pushed as hard as they possibly could and couldn't get that thing to go down. It finished up. This is a great indication, the first sign that maybe this area is going to hold. We start seeing losses of momentum. We get the small on the other side. We're still in that fight, but you can identify a little bit through a market flow chart what's happening on these other charts. So it's an amazing tool. First, use it for momentum. Then you can use it for confirmation. And then you can really start developing some awareness based on what it's telling you. So Z, on the 13-2 charts, all the triggers have crossed over the fibs. Mid-band is at right entry point. Where are you talking about, Z? Down here, no triggers have gone through, right? How could I know that? So now we have strong triggers. Let's just see if the rules are met, right? I'm with you, Z. So watch this. I'm going to give you two answers, Z. The first question is, what do your rules say for taking profits? Do they say, do you have a predetermined management plan? That's not it. Have you said on a piece of paper, have you written a plan that says, let me pull it up here, maybe that you'll trade 2 contracts and you'll take profits at 100 and 200. So if you've written that plan, well, then there you go. That's your answer. If your plan says, if I enter a trade with the rules met, I'll let Fibonacci resistance or a potential termination condition be my spot, then that's another way to approach it. If there's odds favorable momentum, you may hold longer. If you begin to weaken, you may exit sooner. So everything, Z, revolves around having a plan, about making sure that you know exactly what you're going to do if then, which is why that mechanical approach is so handy. Guys, this is a pre-trade picture. Is the market coming from a good bottom? Yes. Odds favorable? Yes. No terminations? Yes. Area for entry inside of favorable large triggers. Look at that window right there where the market's likely to continue. So Z, if you're going very mechanical, if you enter at these 1-to-1s, you may take profits at $100 and $200. You may hold for longer moves because of the momentum. It's a very difficult question to give an absolute answer on. But being able to identify potential trouble spots will help you make those good decisions. Does that make sense? And about the question, is it a right entry point? Again, if you're a high probability trend trader, your only correct entry point is down here at support inside of favorable large triggers. That's a rules-based entry. If you got nervous and you didn't want the market to go without you and jumped in somewhere up here, well, you're hoping that there's not a pullback for all those high probability trend traders. And that's one of the reasons why we wait for that reversal bar, why we wait for that opportunity to sell the pullback. Because if I get in, if it gives me the opportunity to get in down here at the best of the best area, look at the distance to that trouble spot that I have. I can really maximize my profit potential, right? So Z, I'm a big fan, I'm an advocate, if you will, is if you need a little help with stops and targets, keep it mechanical at first. And Z, if you're not in the middle of a trade, let's go through what this mechanical looks like. Guys, this is for everybody. If I take an entry at an area of resistance inside of favorable large triggers, and see how I've defined that management plan down here at the bottom, my initial stop will be 12 ticks adjusted above or below the window of opportunity. You can see that my stop is up here. It's above that highest point of resistance, and my targets are already in place when I enter. Everybody with me on this one? Here's your entry, your initial stop, and your targets, all clearly defined through a mechanical management plan. Let's take the second picture. My stop will be moved 2 ticks above or below the reversal bar in the direction of my trade. So when I get this reversal bar in the direction of my trade, you can see that my new stop, I've reduced my risk, and my profit targets don't move because I'm very mechanical. Guys, if you have a question about this, let me know. I'm going to share these pictures. Put them in your spreadsheet just like I have them in mine. This is your third management picture. I will take profits on the first contract at $100 and move my stop to break even manually. So you can see price has come all the way down to the first target. $100 has been realized. The stop has been moved to break even. And guys, I'm not moving my stop again. Either my second target gets hit or I'm out of it, break even on that second contract. But because I have zero risk, because I've already got money in the bank, it becomes easier as I develop a management plan to feel good about holding for that final contract. And then the final picture, guys, my second contract will be $200. So there's your whole management plan. If you're a mechanical management working on the best of the best, Z, hopefully that helps you a little bit. You can take these pictures, you can study them, you can look at them. That's a mechanical approach. And then Z, the second half of that is if I'm taking that mechanical approach on the best entry, well, I can go back to those pictures and I can say, because I have odds favorable momentum, because there's absolutely nothing in the way, maybe I'll hold that last contract for a Fibonacci area of support because momentum suggests that I'll get there. So I take that very mechanical approach, that no opinion, that no fear, that no anxiety approach, and then I just enhance it with my ability to read indicators. So guys, please steal that. Put it into your spreadsheet, study it, practice it, right? No pullbacks yet over here. I took a trade on Simulator this morning using that very mechanical approach. Let me see, it's probably in my library. I think I accidentally deleted it. Guys, I take more pictures in a day than you guys will probably take in a month. Ideally, you'll take a lot more pictures than I do. And Z, you're very welcome. I'm so glad to help with everything. All right, that was almost it. Here we go. Guys, here's that mechanical approach. Took an entry right at support, right inside of favorable large triggers. Okay. $100 on the first contract. Move my stop to break even. Guys, it hit my second contract and didn't fill it. In the real world, I would have exited with divergence because I have a management plan. But look at this. It came all the way back and caught me. I had zero loss. I think I made $112.50 on this trade. Rules-based entry, super mechanical. And just repeat it. You've taken 60 pictures this week? I love it, Gary. Here we go. That termination condition's holding, isn't it? Price reaches an area of support. Absolutely none of my trigger lines break through. I'm beginning to see change. Large triggers on the 5-1 have rolled. We're starting to pinch a little bit. Still a little early for a long trade. Where's our first trouble spot? Can you identify it using Fibonacci? If this market continues up, what's going to be that first spot where it's going to hit its head and we have to make a decision? I'm not afraid of awkward silences, guys. It just did. Absolutely, Rob. Perfect, Joel. So since you identified where it's going to hit its head, you've also identified which area needs to break, right? In order to take a long trade from a termination condition that creates a full reversal, that provides odds favorable momentum. We at least want to see a 50-50, right? And if we see a 50-50 and there's no divergence, are you guys already identifying areas of support inside of favorable large triggers? Triggers haven't broken yet though, have they? That small trigger is still below the lines. That lower line, it hasn't cleared yet. All we're doing is reading our indicators right now, guys. That's all we're doing. Just because I read it doesn't mean that there's a trade. Just because there's a blue line doesn't mean I'm going long. Just because there's a red line doesn't mean I'm going short. It's just reading. Some of my more experienced users probably got in at a pivot stop out and took it all the way up to that red line. I know some people that love termination conditions and a shift in triggers so much that that's a trade for them. Not for my new users, not yet, right? You guys with me on it? If then, if the market begins to break this area with odds favorable momentum, then I can identify a potential entry. But if and only if my pivot doesn't give me divergence per the plan, right? Per that very conservative, I'm looking for consistency. I'm a medium probability trend trader, but I'm only taking one of those so far, and that's the 50-50 without divergence. And I haven't cleared a path yet, guys. What do we see on the 13-2? Smalls above the large are wide, they're angled in the direction of the trend. I like that. Am I coming from a good bottom, guys? Am I coming from a termination condition that created a full reversal? Let me know if you don't see it, and we'll talk about it. Where am I coming from? What did it produce? Where is it likely to continue in the event that my rules are met? The 5-1 chart for the S&P, is it considered a strong top for a reversal down? Z, what's your definition of a strong top? Mine is a termination condition that creates a full reversal. Does that make sense? Here's a great example here. This is a termination condition that creates a full reversal that gives odds favorable momentum. So Z, I haven't reached any areas on any chart. And strong tops don't happen on the 5-1. Strong tops happen on the 13-2. So in order to have a strong top, Z, I need a termination condition that creates a full reversal. Termination condition that creates a full reversal. There's my strong top. Right now, Z, what we're looking at is odds favorable momentum to the upside. I don't even want to think about down. I've got no termination conditions to the upside. I don't want to think about down. I'm in an uptrend. The only down that I will give any amount of respect to is hopefully a pullback that pulls me to an area of support inside of favorable large triggers so that I can look for a rules met entry for a high probability trend trade. Does that make sense? And Z, you're getting to a point where you're hoping something happens and you're missing the big picture. You're focusing on what you want to do rather than what the indicators say you should do. And not just Z. We're all guilty of this, right? Here you go, Z. Here's an entire section dedicated to the recognition of termination conditions. In order to have a termination conditions, two things happen, Z. Price has to reach an area of support or resistance, and then you determine based on where the trigger lines are whether or not that area is likely to stop the market. If I reach resistance and my trigger lines remain below resistance on the 13-2 chart, I've reached a termination condition. If I get to support and all of my trigger lines remain above, well, here's a termination condition at support. These are great, and these give you that indication that you shouldn't trade in the direction anymore because it may reverse the market. And then Z, to kind of get into that strong top, when this termination condition gives me that reversal on the large triggers, the small triggers, odds favorable, Z, this is a picture of that strong top. And then the same idea from a bottom. When this termination condition gives me a full reversal, and that full reversal gives me odds favorable momentum, that's when I've got that top or bottom. And then this video right here, Z, this will be very helpful to you. And guys, everybody, if you haven't watched this yet, watch it this afternoon. This is a 5-minute recap of how you can determine a termination condition based on that trigger line strength. So there's homework for everybody that's working on their termination conditions. All right, guys, give me an amen or a hallelujah if you believe in rules. Never got trigger lines through resistance, right? Therefore, it was what? A termination condition. Do you see it? Guys, you knew at 11:32 that you better not be going long at 11:40 because of that termination condition. What did it do? Now we have a reversal. Now we have odds favorable. I'm going to hope and pray that I don't hit that blue line before the market's nice enough to give me a pullback, but dag nabbit, they hit it to the tick, right? This is why your rules go together. I love it. I love it when the market gives us lessons live, in stereo. Claire, let's see what you did. Claire, you had a termination condition with divergence. I like it. Guys, remember I said there's going to be people that start looking for opportunities. Claire, you took the momentum. It pushed down a little bit lower. You take the next entry. Real aggressive, in and out. 3 charts, Joel? In Z, did that help a little bit on termination conditions? In Z, I would invite you, come to the first hour of class. We talk about them pretty intently. Oh, awesome. And then Z, if you want, let me throw this out there for you too. Because if you're anything like me, I'm an instant gratification guy. Go to the Nexgen channel. And after this runs through and processes, today's live video will be right here. Go check out the first 45 minutes. It'll really go through and help you with those termination conditions. All right, so Joel, blue on all 3 charts, right? Are you going long? Oh, I hope you weren't, because you just got run over with that odds favorable momentum. Remember, guys, reaching an area, it's only the first part. Still have to make some choices. If it's really going to be a bottom, if it's really going to change the direction of the market, guys, everything's going to roll. everything will roll. Isn't it awesome? If that one little piece of awareness, guys, if that one little understanding that this may reverse the market keeps you from taking this trade and losing, and you don't give up that money and you save it for the best of the best, guys, you're doing better than a lot of the traders out there. We knew where this was and we knew what it would take in order to trade long, right? Ron, let me guess. Break the trouble, get in, make some money. Absolutely beautiful. Just a different plan. Just a different plan. Absolutely, Z. So I'm just going to get you to the Nexgen, to their homepage. So if you're ever in class late and you need to jump in, there's the live recording. And then straight from the live, that's all the recordings. Every class is recorded every day. So guys, if you have an aha moment in class and you're like, oh my gosh, that just clarified so much, go back, study it, look at it over and over again. Weirdness abounds. Subscribe. We got 3,500 subscribers, 3.7. Subscribe. Tell your friends. Guys, if you're here, you've stumbled onto the most powerful software available on the market. I believe that 100%. Tell your friends. Get them in, share it. I want to retire with my buddies. That's just me. I don't want to sit on the beach with a bunch of boring old people. Guys, remember when I told you everybody's going to see something different, right? This was sent to me. There's that termination condition. There's that third divergence with the large triggers on top right here. They've rolled. Remember what I told you? Some next-gen users are going to use that as an opportunity for an entry long. Guys, this is what happens when you really learn to read your indicators. This is what happens when you develop trust. You're not ready for it. Guys, that's not a trade in my plan. But if you've been watching the software, if you've been studying this look, because you're going to see things where you're like, man, I see this all the time. How do I take advantage of it? Well, maybe I just let the area clear and I take profits before I get to the next area when I have odds favorable momentum. Joel, have a good one, man. Thank you for being here. Keep coming back. Everybody's different, guys. Everybody's different. We got 10 minutes. What do you want to talk about? Crude oil looks like they made it to a target. Guys, remember that FOMC is today, which means that these guys are trying to figure out what the heck they're going to do. Termination creates a full reversal, cleared the areas, odds favorable, no terminations. Rules say that's my window of opportunity and the most likely spot for this market to continue from. I don't call trades in this room, right? I'm looking at it right now, George. I don't call trades in the room. All I talk about is whether or not rules are met. Whether or not my checklist has been satisfied. I had the good top or bottom. I have odds favorable. I have no termination conditions. And I've got an area for entry inside of favorable large triggers. Some would say that at this point, I am obligated to activate a limit order at the area of support inside of favorable large triggers because I took the time to write a plan, to create a set of conditions, and I am committed wholeheartedly because I know that this set of conditions wins more than it loses. Dab Chain, the 2 weeks you were absent, you were going through all the videos, reading everything we wrote, came back and after one class had it. We say the same thing every day, don't we, Dab? Every day we say the same thing. Because I don't need to change it up every day to try and sound smart. I don't need to change it up every day to try and impress you guys. Guys, that's not my job. My job is to help you find success. And simplicity does it. Hey, Flavor 44, welcome back. Nice to see you again. Every day, guys, doing the same thing. John used to say if Elon Musk told you that you could make $1 million a year and all you have to do is click a button every 2 or 3 hours, would you take the job? Everybody says yes. Everybody's like, yeah, I would. I would totally take that job. And then 90% of you can't sit on your hands until it's time to click the button. You're like my wife getting an internet, getting a page to come up. If I click it once, clicking it 78 times has got to be a better option, right? So, good stuff, guys. FOMC day can be a difficult day. FOMC day can be a day of indecision, people jockeying for position. Guys, at 2 o'clock, if you're not doing anything, stand in front of that S&P, watch it. It's going to go gangbusters. Absolutely. It's going to go nuts for about 5 minutes. It's fun to watch. It's just interesting because it reminds you how powerless we are, how what we do has no control over the market. There's somebody else making it move. But because the market moves in patterns, we can identify patterns. We can create a set of rules that keeps us focused on those advantages. And because those rules are tested and back-tested and proven to win more than they lose, we learn to accept losers when they present themselves because we know that it's a cost of doing business. Stephen F., thank you. Guys, this is just a little bit. This was put together just from Mark Douglas, who was a very, very talented mentor. He's no longer with us, the late Mark Douglas. But this, out of all of these words, I think is the most profound to me because it takes a while to get to this point. When you stop expecting to win every trade, you'll start winning most of your trades. And you don't care about the result, you care about your execution. I don't care about anything other than being able to follow my plan to the letter. And when you don't care about what happens, the trade doesn't matter. It's a collection of 20 to 25 trades that I track, not one trade at a time. Up and down ticks is all there. Emotional pain only comes from when you believe you create your own pain based on your experiences with the up and down ticks. When you expect to win trades, losing trades is painful. When you follow the methodology that's been proven to win more than it loses, you understand that there's this cost of doing business. I haven't met a trader yet that doesn't take losses. But I can tell you that if you are executing your plan, you don't care about the losses nearly as much because you knew that there was an advantage present. They're just killing crude oil, aren't they? The CL move down was exactly $1. Oh, from the high to the low. $79.80 to $77.80. Absolutely. So Flavor, you're here in Discord as well. Just hang out in Discord. Self-training, user guides, trading rules, all sorts of chart reading, tons of example trades, a place to ask questions. And of course, you can always ask questions in here as well. But man, this is great. You're watching people with all this experience, different looks doing it. Go through there. If you decide that you want to go to the actual website, it's just nexgen-t3.com. Go to the education site. And once you get there, it's that tutorial section. And that's where everything that we talk about is here. Yeah, Rob, there's traders that use whole numbers because there's institutions that look for those whole numbers, right? Awesome flavor. So guys, if price, let's do an if then. If price, for some reason, retraces back to this area, is this an area likely to stop the market based on the trigger look? And if so, as you begin to develop a trading plan outside of high probability trades, will you be able to look for opportunities at this spot? Pretty cool, right? Chart reading opens doors. Chart reading builds plans. But the key is don't come in and try to be a 20-year trader. Don't come in and try to be the first one in the market. Don't try to take 5 different trades. I'm not giving you guys advice. I'm talking to myself here. Focus on the best of the best that's going to create such a solid foundation that it becomes easy to grow from. We're going to come back tomorrow morning and we're going to do this again, right? I'll share that little Mark Douglas snippet with you guys just in case you want to read it. It's a good read. It'll take you 2 minutes. Find some videos on YouTube too. There's a lot that go through from him. Set the speed to 1.5 times. He's the king of awkward pauses. So you're good. Ron C. Too nice out. Yeah, you see where I'm at. Where's yours? Oh my gosh, 69. Says temps plummet though. You guys are about to get everything that Dallas got, right? All my friends in Dallas are sending me pictures. Yeah, for sure, David. For sure. Hey, Michelle. Nice to see you in here. Michelle, I'm going to put a checklist on your spreadsheet, okay? $18. I got a buddy in Minnesota, sends me updates every now and then. None of them look nice. He's Homer Simpson up there. He works at the nuclear plant. It's kind of funny. Michelle, I love this. You know why? NG time, make sure you don't have that white arrow up there because you have a termination that creates a full reversal. You have odds favorable momentum. You have no termination conditions up top. And you said that 2 divergence should have kept you out. And Michelle, I'm going to respectfully disagree. I want you to look at where your small triggers are at the time of that divergence. There's no reason yet to have 2 divergence create a problem for you. And the cool thing is when you've got that little pivot stop out above, you can anticipate it to take out that little previous pivot, which puts you right at a mid-band inside of favorable large triggers. I think it was an amazing trade. I think it was a rules-based trade. And let me show you the wisdom that was shared with me regarding that trade from someone else that took it. That was the message that I just got. Win, lose, or draw. I don't like the I think. This was the right trade, 100%, Michelle. It just didn't work. We're looking at the S&P, and we're looking at it 2 hours before FOMC. It's lunchtime. And Michelle, that's why I love it when you guys post in here. But it was such the right trade, Michelle. There's my yellow area for potential entry if you're a rules-based trader line. Just the people in control had other ideas, didn't they? It happens. Hope you're doing well. Hope your trading is great. Guys, I hope everybody's trading is going well. I hope you're excited about your journey that you're on. Welcome to the new month. Let's make some commitments. Let's commit to do it right. Let's commit to writing a plan. Email me that plan. If you write a plan and you're like, hey, Mark, will you put eyes on this for me? Let me know what you think. I'm always willing to. I actually enjoy that very much. I enjoy the education process. I love working with you guys. So give me that opportunity as much as you can. Guys, have a great afternoon. I'm probably going to go find something to do other than trade during FOMC. I will see you guys tomorrow, 9 a.m. And we're going to do this again, guys, every day till you get right where you want to be. Take care, everybody. I'm going to shut her down.